When it comes to shopping for a mortgage, remember, you're not a guy on Bumble. One, you don't have to go with the first person that pre-approves you. And two, it's okay to come off as cheap. I mean, I've seen clients save as much as 1% on their interest rate by shopping around. On a $1.5 million house, 20% down, that's almost $800 saved every month. So yes, today we're going to talk about how to shop for a mortgage in 3 steps. And by the way, a big thanks to loan officer Chris Cappello with Guaranteed Rate, who helped me put some of this content together so you can shop for a mortgage like a mortgage broker. So step number 1, assessment. Check your own credit report and correct or dispute any issues or discrepancies. I mean, I've known people who've had unpaid child support show up on their credit report for kids they never had. So for the sake of your loan officer and, well, your wife, pull your credit report and clean up any issues. And regarding your credit score, here are some things to keep in mind. 1, most lenders use the FICO score, which ranges between 350 and 850, and you're typically going to qualify for the best rate with a score above 780, and typically the minimum to qualify is a 620. And 2 of the biggest determining factors of a good credit score are 1, payment history, which accounts for about 35% of your FICO score, and 2, accounting for 30% of your score is amount owed. So if you want to improve your credit, 1, avoid late payments, and 2, keep your credit card balances low, under 30% of your available credit. Also, avoid having too many credit inquiries. As you get closer to buying a house, avoid new credit cards, car payments, and no, don't get a boat. But anyway, now that you've assessed your current credit situation and you prove to your wife that those are not your kids, now you're ready for the next step. Step number 2, shopping. And ideally you want to shop with a minimum of 3 different lenders and different types of lenders. For example, one may be a mortgage broker who can give you access to different lenders. Another option would be a traditional bank that also does mortgages, and a third could be like a credit union or a mortgage company. And the reason for the different types of lenders is you want to have a good range of opinions. But anyway, so how do you actually shop for a mortgage? I mean, do you just go online and compare prices? Do you just call different lenders and be like, hey, so yeah, how much is your interest rate? No and no. And unless you're lonely and you want to get a bunch of telemarketing calls, avoid filling out your information on websites like Bankrate and Lending Tree. Now, keep in mind, different lenders have different requirements. So even if they advertise a really good rate online, it doesn't necessarily mean you're going to qualify for it. The interest rate that you can actually get can be very specific to your situation, including income, debt, down payment, credit score, source of income, and, well, just a bunch of other factors. So different buyers will get different rates even when working with the same lender. So considering that interest rates are specific to each buyer, what you need to do is get a pre-approval letter from each lender that you want to compare. And no, not a pre-qualification, nor an answer these 3 easy questions online and get approved for a mortgage in seconds. No, you need a solid, full pre-approval, which means you supply documentation to the lender, including bank statements, W-2s, pay stubs, and yes, they pulled your credit, to which you're now like, no, don't do that. That's gonna hurt my credit score. And the verdict on this is yes, despite the bunch of different opinions that you've already heard on the topic, yes, it will. So here's what you can do. And by the way, my name is Daniel Rangel, real estate agent in Los Angeles. If I can be of any help, it would be an honor. And for a consultation, you can find my information in the description below. And if you like this video, don't forget to hit like or subscribe. But once you've gotten your first pre-approval letter, before you choose your second and third, screen them out first. For example, using the information from your first pre-approval before you formally apply for another, contact the new potential lender and be like, hey, so hypothetically speaking, subject to a purchase price of $1.5 million, 20% down, 750 FICO score, 30-year fixed, and paying 0 points, what interest rate am I kind of looking at? And if they say like 6.75% and your first lender said 5.75%, you might just want to skip this lender and find someone more within range. Now, the second thing you can do is ask them if they can pre-approve you with a soft credit pool as opposed to a hard pool. A soft credit pool typically has the effect of like you pulling your own credit and doesn't really affect your credit score. And all right, so now you've gotten 3 real pre-approvals and maybe 1 hard credit pool and 2 soft ones. So like, now what? I mean, is it time to negotiate, pin them against each other and have them fight to the best interest rate? Actually, surprisingly, no, at least not yet. Hang in there, we'll get to that later. Now, at this point, many lenders will just give you a pre-approval letter, but not a loan estimate with a breakdown of your closing costs and interest rate. So if they haven't, go back to Authority and ask them for a loan estimate quoting the interest rate on a specific date. Now, keep in mind, interest rates can vary daily. So in order to like really be able to compare apples with apples, you want them to quote you for the same date. You also want them to quote you for similar loan terms and purchase price. Now, regarding the loan estimate, there's actually a universal loan estimate document intuitively called loan estimate, and we'll talk about that later, but it is required by the federal government and was created to make comparison shopping easier by making lenders fill out the same sections. But at this point, because you haven't identified a property, technically they're not required to issue you this universal form, and unfortunately, well, many just won't. But they should be able to issue you their own version of the loan estimate. Now, each lender's form is going to look totally different, which can make mortgage comparison shopping kind of harder than booking a flight on Expedia. And because of this, sometimes it's already a good idea to have a realtor. For example, with my clients, I typically help them compare and kind of make sense of the different loan estimates. But if you don't have a realtor at this point, here are a couple of things to keep in mind. One, when it comes to the closing costs on the loan estimate, keep in mind that about 75% of the itemized lines on that loan estimate are outside of the lender's control and have nothing to do with their actual fees. For example, the lender may include an estimate for the escrow service, but the escrow company will typically be chosen by the seller once you have an accepted offer. So at this point, no one really knows what the actual escrow fee will be. So you may end up going with the lender that gave you the low estimate on the escrow fee, but in reality, that kind of has nothing to do with anything. And if you don't have a realtor who can break down the relevant fees for you, the best thing you can do is ask the lender what are the origination costs or Section A costs. And by the way, Section A refers to that universal loan estimate document that we talked about earlier. And Section A is where you're going to find the fees that are directly tied to the lender. And these are the fees that you want to compare. And these can include a processing fee, an underwriting fee, and very importantly, discount points. And discount points are pretty much money that you pay up front to essentially buy a lower interest rate. So maybe one lender offers you an interest rate of like 4.5%, and the other offers you an interest rate of 4.8%, which at first glance is like, heck yeah, 4.5, here I come. But then you look at the Section A cost, and the 4.5% interest rate actually comes with a $15,000 discount fee or additional closing costs. So at this point, the 4.5% interest rate may not be the best option. So again, when comparing lender closing costs, focus on the Section A costs or origination costs. And again, at this point, you're not really negotiating, you're just listening, learning, and taking notes. And aside from seeing which mortgage lender offers you the best fees and rates, equally important, very important actually, is also the actual loan officer and their customer service. I mean, if this were a refinance, yeah, sure, go with the lender who gets you the lowest price. But because this is a purchase and you will be signing a time-sensitive contract with another party, the loan officer's performance is incredibly important. I mean, best case scenario, you cancel the transaction and you lose your dream home. Worst case scenario, you lose your $50,000 deposit or get sued for breach of contract. So my recommendation is strike a balance between the best rate and the best customer service. You want someone who's easy to talk to, serves as a consultant, and equally important, gets the job done. And keep in mind, among other things, that in Los Angeles, most seller agents, before they accept an offer, will interview the buyer's loan officer. And in a multiple offer situation, that conversation can influence whether your offer is accepted or not. But anyway, so now you've interviewed several different lenders, you got 3 pre-approval letters, and you kind of already have an idea of who you're going to go with based on a balance of customer service and rates. Now, if you're going to want to negotiate, I typically recommend holding off till step number 3 because the lender with the best rates now may not necessarily be the lender with the best rates by the time you get an offer accepted. So for now, start looking for a house and get an offer accepted. And once that happens, then you're ready for the next step. Step number 3, negotiate. Now, if you choose to negotiate, this is the point where you're gonna have the best negotiating weight when you have an accepted offer. At this point, you're pretty much saying like, hey, I'm ready to go. The money's on the table. What's your best offer? And because now you've identified a property, you should be able to ask them to quote you using the Universal Loan Estimate document, which should make it easier for you to compare fees, terms, and rates. Now, alternatively, at this point, you may choose not to negotiate with all the lenders and just focus on one. Maybe you already fell in love with one lender. She's been consulting you and your real estate agent along the way. She took the seller interview. She's competent, but she doesn't necessarily have the best interest rate. You could take this time to reach out to her and be like, hey, I love you as a lender, you're amazing, but lender B is quoting me this. Can you match them or get close? And at this point, because the money is pretty much already on the table, you have an accepted offer, most lenders will typically put their best foot forward to not lose the deal. Now, keep in mind, once your offer is accepted, you typically only have 1, maximum 2 days to decide your official lender, which is why I recommend that you already have those 3 pre-approval letters. At this point, you want to be dealing only with lenders who already have all your documents and can offer you realistic quotes. You don't want to be 5 days into escrow, then all of a sudden the lender's like, after reviewing all your documents, my bad, that interest rate that I said was 4 is actually a 6. And in summary, to shop for a mortgage, remember ASN, assess, shop, and negotiate. But anyway, again, thanks to Chris Cappello with Guaranteed Rate for helping me put some of this content together. And if you want to consider him as one of your lender options, I'll put his information in the description below. And by the way, my name is Daniel Rangel, real estate agent in Los Angeles. If I can be of any help, it would be an honor. And for a consultation, you can find my information in the description below. And if you like this video, don't forget to hit like or subscribe. But either way, thanks a bunch for watching and have an awesome day.